This is Mark Anthony with Mercury Time Price Analytics, and this is our end of week algorithmic futures trading update for January 5th, 2020, covering the action the previous week as well as the Globex Open. Now, normally these weekly updates would be recorded on Saturday. Due to some previous commitments, we're recording this on Sunday evening about 8 o'clock Eastern Time. And I'm glad we're doing this now rather than yesterday, because the gap down open that we saw in Globex is exactly what I wrote about in my weekly update. If you haven't been to our website, it's mercurysignals.com. The blog post was titled Dr. Jekyll and Mr. Hyde, and the title is simply Change of Character. Now, what I want to talk about this week that's so important is the difference between the price action that we see on a chart compared to what's happening behind the scenes algorithmically, specifically in terms of time. Remember, time is more important than price. The algorithms the institutions use are heavily weighted on price. So when we had the news out of the Middle East on Thursday evening, ES had just made a new all-time high. It had drifted higher in Globex, 32.62. Our Algo got short, 32.61 and change. I mean, that's how precise this is. Here's the point. You get a move down Thursday night from 32.63, and this broke a little bit after 9 p.m. Eastern Time. And by 6 a.m. Eastern Time on Friday morning, ES traded all the way down to 32.06, and we got a powerful bounce from there, traded all the way up to 32.46 before the end of the lunch window on Friday. It was a little bit before 1 o'clock. We got this move up here. And this looks like a lot of volatility in terms of price. But I want to show you what's happening underneath the scenes, because we had major algorithmic congestion areas between 32.32 to 32.34, and also down here at 32.21 to 23. Now, you can see it a little bit on this chart, but I want to zoom in. This is the ES continuous contract, and we have, for our subscribers, a different set of pivots on our ES continuous chart versus the March contract, because the pivots on the continuous chart, these are our Mercury bands. These are released in the evening. These are based on RTH close data. We run these early evening, so they're available for subscribers who trade Globex. These pivots run all the way through the European Open, and they're good for the next day because these are long cycle pivots. These look back not hours or days, but weeks and months. And they take all this into consideration. And so we put these wide bands, and if I zoom in a little bit more, there's a lot on this screen, but you can see there's significant amount of space and handles between some of these pivots. So those are released in the evening. Now in the morning prior to the Globex Open, there you go. In the morning prior to the RTH Open for the day session, we have our Mercury dynamic pivots, and those are more granular. We run those in the morning, and they have to be run at a specific time to the minute pre-open, so that they give us an accurate snapshot of where these algorithmic pivots, these horizontal lines, are going to reside during the day. If you've never seen any of our videos before, every line on here is an arithmetic algorithmic pivot. These have nothing to do with just eyeballing the chart and saying, well, this looks like support, this looks like resistance, let's draw the lines there. Everything on here is based on a formula that we run. After the data is output, we put it on a data sheet like this, and then we take these levels and we overlay them on the chart, and this is what our subscribers see. So our subscribers have access to a live chart feed, and when they log into that live feed, it's going to show them both versions of ES, the continuous contract with the Mercury bands, the long cycle stuff, as well as the granular levels, the dynamic pivots that we release in the morning. You can see how much more compressed these are. So let me go back over here to the wider view chart. We'll switch this over to the March contract. Now, because these dynamic pivots are run in the morning, what you see in the chart right now as I record this on Sunday evening, January 5th, these are the pivots that were put out Friday morning pre-RTH. When we zoom in a little bit, you're going to see this absolute mess right here between 32 and 34. I mean, even extending up to 37. But if we had to count those pivots, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 pivots that are right in that little area. And if we zoom out a little bit more, you can see how jumbled this is. You've got this right here, and then you've got another congestion zone right down here, 32, 22 to 24. Now, the whole point is this. You can see this substantial price volatility, but behind the scenes, you could, at the same time that you have this price volatility, you could have congestion in these time price algos like we have here between 22 to 24 and 32 to 34 and 32 22 to 24. And I just want to move over to a screenshot that we posted in the blog post. And here you can see these a little bit better, but I want to zoom in one more screen and show you the congestion area. So here you have the algorithmic compression in this area here, 3232 to 3236, and also down here, 3221 to 3223. Now here's where it gets interesting. Everything on that screen was horizontal pivots. But if we go over here to our actual time price algorithms, I want to show you what they normally look like in a healthy uptrending market. So this is earlier in the year, and notice the nice wide spacing you have in these algorithms. That's what you see in a normal, healthy, uptrending market. When I say algorithmic compression, this is what I'm talking about. This stuff right here, and taking the horizontal pivots and looking at them on a chart. I want to show you two examples, because when you get this type of compression in these pivots, one of two things is you're going to get a big move, period. The question is that big move going to be up, or is that big move going to be down? Now, when you're dealing with mathematical algorithmic pivots, the first rule is you don't guess. The reason we have math is so we don't have to guess, okay? We don't have to guess that 2 times 2 is 4. We know what 2 times 2 is, so you don't guess with this stuff. But I want to show you 2 examples, one of a congestion zone like this breaking down and another breaking up. So here we go, and I'm using SPY on this because if I were to use either the ES continuous or the March contract, you've got all that other stuff on it. But this just shows you those same type of algorithms like we have here. But here's an example of congestion. So back here at the time, we're trading about 300 SPY, 3000 ES. And look at how all this is compressed, all right, as compared to this. All right. So when you have a market that's healthy, uptrending like this, you'll get these pullbacks to these algorithmic oscillators, and then price will bounce. And sometimes you'll get a deeper pullback too. But when you get these all together, think of it this way. Imagine you had a long, wide piece of plywood, and you had it supported between 2 columns underneath either end. Well, if you had one piece of plywood and you put a weight on the top in the middle of that piece of plywood, it wouldn't take much weight for it to crash right through the middle. But imagine you had 5 pieces of plywood, or 10, or 20, or 30. Well, that's going to hold a whole lot more weight. But what happens when it breaks? It's going to make a lot more noise. It's going to be much more dramatic. And so here we have this, and this is back beginning of October. And if you're wondering what freaked out central banks globally, and when I talk about central bank, I want to be very specific about something. I do not get into the politics of central bank policy. Everybody has their own opinions, and that's great. But those opinions don't make anybody any money, because you could sat around complaining about central bank liquidity and the socioeconomic results of it, and whether it's good, bad, indifferent. And if you're a trader, it doesn't make you a dime. That type of discussion is, great for cocktail parties. But as traders, we need to operate with reality and what we're given in real time. So this is what you get when you have this compression. You had a break here, and then you have a retest. And what you'll see a lot with these algos is you get this little overthrow, or I call it a hook, where you had the break right here, came down, and then instead of just going up methodically to the support that's now turned resistance, you get this little bit of an overthrow, and this will usually happen late in the day on specific cycle days. I don't have time to get into that right now. We'll save that for another video. But you get this little overthrow because what ES loves to do is run stops. Now we're looking at SPY, but it's no different. ES loves to run stops above and stops below. So you get this little hook, and then when it breaks, then you get this kind of stuff, and then you get the prolonged move. So this is another reason why you don't have to guess. If this move comes down, and everybody thought 3,000, that's a roundy of roundies, and we get a break below that, then the big one's coming, and then you get all FOMO'd up, fear of missing out, and you pile into this short. We get a retest anyway, and then second entries are always better. You ever hear the expression "second mouse gets the cheese"? Jeff Cooper, brilliant trader, believe he wrote a book with that title, but this is an exemplification of that theory. Doesn't matter that you missed the first one. There's almost always, and I say almost, there's almost always a second chance, and that's what you get here. And when that second one breaks, then you get this move all the way down below 2,800. And not only was it a large move in terms of handles, but it was fast. I mean, this is 8-1. This is 8-5. Now, you had a weekend in between. So this is the trading day this broke, the next day, weekend, and the following week. So this is 3 trading days. That's an example of algorithmic time price congestion breaking and going much lower. Now, here's an example of the opposite. So here we have the same type of congestion. And this is a different move. This is in December. So December started, first trading day I believe was December 2nd. Second and third we had a big move down, which is right here. This is a screenshot, so I can't scroll this back. But you had this move down that was like 30.72. We're looking at SPY, so yeah, 30.72 ES, which at that time was the December contract. And then we get this move back up, period of consolidation, and then you get the liquidity spigot. But here you have that same type of congestion. You had all those algos, which again, under normal circumstances, are spaced quite a bit apart. And you get this again, and just think of it of just like a cardiac event. You get a blockage, and something's going to happen. And here you get a blockage in these time price dynamics. And this time, you had the momentum of coming back up here. You had 1 test, 2 tests, and the third time, a lot of times with algos, the third time is when it breaks. So you have a move up once, a little bit of a retracement, makes a little bit of a flag formation, sideways consolidation. You get another move up. You get this fake out move, which ES is notorious for. And then the third break up of this congestion zone, and this was a tricky setup because then you got this move down and this move down. Now that is not normal. It's not normal to have 1, 2, 3 times up and then this other breakdown. So there were technical conditions in the market that if you let this go, I mean, then you're going to break this and this and this and this. And again, I'm not going to get into the politics of central bank liquidity, but it is what it is. So then you get this move up into the end of the year. Now, here's the whole point of all this, and this is the reason why I wrote about this in the blog post today. And you'll see these same charts with explanation. here's the point that I made in the beginning of the article. I don't pay attention to financial news TV during the day. I could care less. All it's going to do is mess with your head. But I have it on in the background because why not? What you saw quite a bit in the early part of December is the conventional wisdom from the TV analysts saying that we're likely to still get a drift up in a year end because of the liquidity that's being put into the market, and then we've got folks that are deploying capital at the beginning of the year, and we're typically going to get everything is fine until March. I mean that's what you heard with very few exceptions. So you get people telling you at 3150, 3200, 3250 in December, clear sailing until March. Well, as I said in the blog post, that's great. Tell me what the weather's going to be in March. I'd like to know that too. But here's the problem with this. Who counted on getting this type of action 3 trading days into January? And considering that we had this action Thursday night, it was the second trading day in January. And so after we got this on Thursday night, then we get these congestion levels that I mentioned, and you've got potential problems. Now, folks will look at this and look at the news flow, and there's no doubt that there's going to be some further events in the Middle East due to what happened on Thursday evening. But there's another trading adage that the news breaks with the cycles. We had a cycle date coming up the first few trading days in January anyway. And when you had this kind of extension, we were due for this. Now what's going to happen from here? Well, we traded down to 32.19, which, by the way, is exactly what our lower pivot is that we put out on our Slack channel. It's right here, 32.19.11. I mean, the gap down was right there to 32.19. So who knows what we get this week? But the key is, when you're using algorithmic trading systems, you wake up in the morning to start your trading day. You never have to guess. You can go to bed at night not worrying about what's going on with the price chart, because there's always going to be a trade. Imagine if you missed this move down on Thursday night from 32.63, and you wake up in the morning, and for the last 3 months you've been dying to short every little blip up in the market, and then you wake up Friday morning and you see this, and you're all upset because you didn't take part of it. So then you short this blip higher, and you short this blip higher. This was 32.24. And then 32.32, and even if you're looking at these algos, you're thinking, well, it came all the way down here to 32.05. There's no way it's going back through that congestion zone at 22.23. Well, it sure did. And then the conventional wisdom at that point is, well, it's not going to go through that congestion zone at 32.32 to 32.36. Well, it did. And it went back up here to 32.46.50, or a handle below that. And as I put out in our Slack channel, probably half a dozen times on Friday after we got this initial bounce, I stated that there's unfinished business between 32, 42, and 46. And this is what we had, and more specifically, 32.46.50. 32.46.50 was a key inflection point all throughout this price friction zone. And so ES went back up there. Anytime that you have levels that ES fights over for a couple of days, 2-3 days, and you get a fast move like this through it, you'll almost always get this retracement back. Those friction levels, once they break, they create magnetization back to those levels. Now the question is, what do we get after that? Well, the fact that ES closed right in this 32, what was the close, like 32.34 on Friday, the fact that we gapped down through that, it technically has more meaning than the gap itself. So for the bulls, you need to recapture this 32 to 34 area and sustain price above it. If not, then we've got some deeper retracements. And when you pull the chart back here, you can see some of our other algorithmic levels. The swing trend pivot on Friday was 32.13. Well, that was busted and then saved. Now below that, are these the updated ones for this evening? Yeah, these are the ones. Let me just double check. 94.79.61. Now these are the ones from Friday. Let me go back over here to the ES continuous chart because that's already updated with the Mercury band pivots for the remainder of Globex tonight as well as tomorrow. And you can see where these lower levels are. Our Mercury band long cycle upper, and when I'm talking about these cycles, our Mercury bands, we have a short cycle and a long cycle. Even the short cycle is a significant look back in terms of the number of days. The long cycle is twice as long. So the way we do this, if you just envision in your mind the construction of a Bollinger Band, you have an upper band, a lower band, and a mid band. Well, here with our Mercury bands, we've got an upper band, a lower band, and two mid levels to give you more places to take profits as price moves into these zones. So the short cycle has 4 levels, the long cycle has 4 levels, and then we give you these upper and lower extension pivots. Now the whole purpose of taking our automated oscillator, there we go, our automated oscillator, which is what you see here, the whole purpose of these horizontal lines, these are algorithmic pivots. We call them profit capture pivots. So if you were fortunate enough to be watching our live chart on Thursday evening and you're in this short, well, look at all these spots that you have to take profit on the way down. So if you're trading multiple contracts, if your size account enables you to appropriately manage that risk, trading multiple contracts, well, then you have multiple opportunities to take profits all the way down. And then the system got long in here. Now, this is our standard day trading cycle. Our faster cycle, which runs on a 3-minute cycle, got flipped back long much earlier. The standard cycle flipped back long at right about 32.27. Our fast cycle that runs on 3-minute bars got back in at 32.17, a little over an hour earlier. So we have multiple automated algos, regardless of what your trading style is. We have 2 swing trading algos, this conventional one and then the fast one I just mentioned. If I said swing trading, I meant day trading. We have 2 day trading algos. It's been a long day. The regular cycle and a very short 3-minute, very responsive 3-minute cycle. We have swing trading cycles, and then we have even longer term positional trading cycles. The last thing I wanted to point out is our positional trading algo on ES has been long since 3118, and on NQ about 82, a little over 8200. We have these same systems for NQ. If you're an NQ trader, it's hard to find trade rooms that do NQ and do it well. We give you both, whether you're ES or NQ. Check out our website, mercurysignals.com. By the way, there's a winter special, 62% off our regular rates. But we give you these for ES and for NQ. But here's the point. Those longer cycle positional trading algos have been long for many, many, many handles. And on Friday, they were right at the cusp of flipping. As a matter of fact, if we wouldn't have got this bounce back, we had them start to flip. And those long cycles, what will happen, the swing trading and the position trading cycles, used to be once those triggered and they locked into a trade, I mean, you could guarantee 60, 80, 100, 110, 120 handles. But because of the liquidity that's been pumped into the market, very often over the last couple months, we'll get a trigger on the longer algorithms, and literally within an hour, 2 hours, it'll reverse back up higher. Now, with this action, I can almost guarantee that those algos are going to trigger tomorrow if they haven't already done so this evening in Globex. And then it's going to be interesting because If you bought up here, I don't think you're of the opinion that we're looking to clear sailing till March anymore, even though that was the conventional wisdom a couple of weeks ago. I think if you're long up in here, 32, 30, 40, 50, heaven forbid 60, then I have to believe folks are going to take something off the table when we get a bounce, and we get a bounce above this level. So we're going to have to see how that works out tomorrow. That's it for now. Very important update. Please feel free to share this with your friends. If you were wondering why the algorithms give different signals than what you see just on price data alone, that's the explanation. Perfect timing, what we saw today and on Friday and Thursday to share those points. So thank you so much for your time. We really appreciate you being here. God bless you. God bless your family. We look forward to seeing you soon.